If you don't know, I'm Tyler Williams. I'm the founder and chief technical officer here at CSQ. And today we have Quintin here with us to talk about risk management in the cannabis industry. Quintin is with both the Sterling Insurance Group and Assured Partners. He has 8 years of insurance, risk management, and human capital experience, with 5 of those years being in the cannabis industry. He's a member of the Michigan Cannabis Industry Association and the National Cannabis Industry Association's Risk Management Committee. Some of his favorite hobbies include hiking, cooking, bourbon, and golf. So with that, I'll let Quintin take it away, and then we'll get started. Just some housekeeping stuff real quick. If you have any questions, please put them in the chat. We will have a time for Q&A at the end. So you guys, all your mics should be muted. So if you do have questions, just put them in the chat room and we'll get them answered.
Well, thanks, Tyler. I appreciate the introduction. Maybe I should start subbing in cannabis for the bourbon. I don't know, but I appreciate it, and I appreciate everyone's time. I will keep this as exciting as possible. The risk management, incorporates a good degree of insurance, so I will do my best to make sure none of you fall asleep. I'm going to share my screen. I've got a couple of slides. I think it's easier to visualize some of this information. So I'm going to share that real quick with you all. Give me a second here. All right. I'm assuming you can see it. Tyler, would you mind giving me a check on that?
Yep, looks good on my end.
All right, good deal. So what I want to do with everyone here is, 15, 20 minutes tops. I'm going to run through kind of a high level really quick on risk management in cannabis. It's a hot topic. It's something that we talk about in every state that cannabis has some type of presence in, or CBD for that matter. But really what I want to do is just give some high level framework. Hopefully, a little bit of information to get you thinking about how you look at and define enterprise risk management and how it can support your organization, whether you have a single retail center or you're in the midst of scaling and becoming an MSO or just vertically integrated. I think that what I'll touch on today can impact your business positively no matter what direction we take. And I know Tyler mentioned we're going to take some questions at the end. If that still isn't enough time and you have additional questions, please follow up with us. I mean, this is information that I think organizations need to take into account and work on, on a daily basis. And so if this isn't something your organization is really, taking a look at implementing, it could take, 3 to 6 months before you've really got your strategy down and you're using that as you move forward. So I'll give some high level on how I think state requirements play into your risk management strategy. I'll do some coverage road mapping, which is a little bit more specific to the insurance portion of risk management. I'll talk about some challenges that you'll inevitably encounter in primarily the insurance space, but then how that flows over into the overall picture of risk management and how you should use risk management to move your organization forward. I'll also define risk management. You're going to hear me say that word so many times, you're going to be sick of it, but there's a reason behind that. So to start off, when we talk about cannabis and we talk about risk management, a primary piece of that in any business, but especially in cannabis, is going to be transferring risk through means of insurance. And we'll talk a little bit more about other ways you can mitigate risk or utilize the tools of managing risk. But insurance is going to be a primary way of doing that. And I start with talking about state requirements because oftentimes state and local requirements might include some type of insurance requirement. And what I find is, especially newer entrants to the cannabis industry, is that it kind of defines the initial insurance strategy, and then it never really gets as far as a conversation around overall risk management. So, how are we insuring our business, and then what does that leave unexposed, right? So what uninsured exposures do we have, right? How do we want to address that? It doesn't get that far. Basically, you look at the state or the municipal insurance requirements, you check a box that you have them once you obtain them, and then you move forward, which is understandable. You got to move pretty fast in this industry. But I like to talk about it because I can kind of show you. I use Michigan, my home state of Michigan. I think has a great example of a situation where there's good intent from the state and it serves a really good purpose. But as an organization, you might need more than what the state's asking you for. And so in Michigan, we have financial responsibility requirements that you can satisfy via purchase of insurance. There's a lot of wording here on a slide that I'm not going to read through, but the bottom line is you need to obtain general liability insurance and product liability insurance, and in some cases, auto coverage. Product liability insurance required by the state of Michigan is essentially at $100,000 a license. The thing with that is if you're doing a, $4 or $5 million a store or more, and you look at the way the supply chain's laid out in the cannabis space, is $100,000 in product liability insurance really enough if there's a widespread claim? A bodily injury from somebody consuming your product. Is that enough? In a lot of cases, I would argue no. And so what I see is a lot of organizations procure the $100,000 limit per license, and then it becomes kind of a back burner issue. And at face value, it might seem like, yeah, we've got the insurance we need. We can focus on other objectives. But the reason I think there's more to it is, let's take a step back and look at risk management as a whole. Like, what is it? When I keep saying this word, what do we mean? You could probably talk to several different industries and get several different answers, but coming from this insurance and risk management background, we commonly break out risk management into 4 or 5 areas. The first is avoidance, which is plain and simple. I mean, just avoiding a certain market segment or a certain decision altogether and avoiding the risk and exposures that it may bring. There's reduction, which is really the nitty-gritty of managing and mitigating risk. Then there's the transferring or the sharing. That's the insurance piece. So, purchasing an insurance product so that you don't have to pay the full amount of a loss. You're sharing that with the insurance company that you're working with. And then there's retention, which is, essentially self-retaining risk, self-insuring risk. So a good example in the cannabis space is indoor crop insurance, outdoor crop insurance. It's costly. I see a lot of operators that just choose not to purchase it, which is totally fine. But when you take this route, you really got to make sure your risk reduction policies and procedures are top notch. You need to understand your cash flow and your financial position, and you probably run it by your investors and make sure they know that you have a plan to retain risk. And should you have a widespread loss, that the balance sheet supports whatever that might bring. And so the bottom line is there's this umbrella here of risk management. Things like employee benefits, things like insurance fall underneath of it, but they shouldn't be defining the overall strategy that you put into place. Now, that said, in the cannabis space, because of the weight of insurance and the challenges we encounter, I think we do need to start there. We do need to have the conversation around insurance, and then we let that drive how we form the risk management strategy around it. And so I like to talk a lot about coverage road mapping and positioning your business, both from an insurance perspective and then your broader enterprise risk management strategy. And so, what are some things you can do? High level, make sure that you're mapping the insurance coverages you're purchasing or choosing not to purchase and your overall risk management strategy to whatever your strategy is going to be around expansion from the very beginning. So if your plan is to build up a business for 3 to 5 years and make it exit, that is going to be an entirely different risk profile and understanding of how you want to implement and spend on things like insurance versus risk management than if in 3 to 5 years you plan on being vertically integrated, possibly expanding as a multi-state operator. Those are 2 totally different strategies. They're going to have similarities, but they're going to break apart, and you're going to need to plan for that really from the beginning, because it's going to drive your bottom line. You're going to see the cost from an insurance perspective go up depending on what you do. But you're also going to need to figure out how to redistribute ROI and restructure maybe how you're approaching risk and creating a culture around safety and risk management. Part of that is understanding your risk tolerance. It's one of the most, I think personally, one of the most commonly overlooked things, especially in the cannabis space, is, what is your appetite as an organization to retain risk? If you decide not to insure your crop and it's a $2 million crop at any given time, so you have a total loss, maybe a bad windstorm comes through on an outdoor crop, or I think indoor crop is a little bit more susceptible. You have a fire and you're not really able to mitigate through condensing into oil. If you have that major loss, can your organization support a $2 million loss on the balance sheet? Maybe it can, maybe it can't, but it's going to be a different answer for every organization, and it's going to drive how you implement strategies. So just plan from the very beginning, and then keep in mind if you're new to this space, the risk management conversation, the insurance conversation, a lot of times I find, I get the comment, you know what, we're not quite to licensing, let's hold and let's have a conversation then. Well, if you've bought property, if you're renovating property so that you can get C of Os and move through the licensing process a bit quicker, if you're doing any of that, insurance and risk management should already be at the forefront of what you're doing. I know it's easier said than done, but I think the bottom line is plan from the beginning and take several of these items into account. As you think about insurance, and this is where we really start to bring in the risk management component, you're going to have challenges. The cannabis space is new. Insurance companies don't like new, new exposures, new risks. So you're going to encounter challenges. And there are some areas I think specifically that I'll bring to your attention that aren't really new challenges. And we're starting to see some relief. But at the end of the day, there's still challenges, and you'll probably face them for another couple of years. So you might as well get acquainted with them and figure out what your strategy is going to be to counter these. So the first and foremost one I like to talk about right now, and it's been a hot topic for years, is D&O coverage. So directors and officers coverage is what we mean when we abbreviate with D&O. Falls right in line with management liability, so things like employment practices liability. I bring this up because when you're thinking about your cash flow strategy, when you're thinking about capitalizing, take into account some of the costs that I put on the slide here, and they're only going up. We're seeing D&O coverage. We call it a hard market in insurance. Basically, it means that prices are going up, and oftentimes insurance companies are limiting their capacity, which essentially means you either can't get as much of a limit as you might want or need, or you have to put more skin in the game and carry a higher deductible. And we're not talking about like a home and auto deductible, $2,500, $5,000. We're talking about $50,000 or $100,000 deductible. Significantly changes your strategy when you think about the cash flow you have on hand. You have a loss, you're paying the first $100,000, and then your insurance is going to kick in, and you could be spending annually $40,000, $50,000 on that insurance. So your total all-in cost in a loss scenario could be 140 or 150 grand before you're seeing an insurance policy kind of kick in and provide some of that risk transfer. I put some additional pieces of cost on here. I would expect to pay, if I'm a cannabis business, anywhere from $20,000 to $100,000 for every $1 million of coverage you want. If you got lower revenues, kind of a lower risk profile in general, you're probably going to come in more around the $20,000 to $40,000 mark. But if you're, got a couple of locations, quite a large employee base, well capitalized, start etching up $50,000 to $100,000 per every million of coverage. And sometimes that's not dictated by your organization. You might have investors that you really want to bring on board, but they want higher limits. They want certain terms that are going to cause you to purchase a more expensive policy. All things that make sense to start asking the questions in the back of your mind and forming a strategy around have a significant impact on what you do as a business. There's some general challenges you'll encounter as well. So beyond D&O, you're going to find some of the same struggles. The property insurance marketplace has gotten a lot better over the years, but every now and then we have a heavy season of losses, and you start to see some companies pull back on capacity and the amount of coverage they're going to give you per location or for your crop, whatever it might be. Also, the terms are narrower. So if you're entrepreneurial and you're entering this industry from a different industry, manufacturing, real estate, you name it, you might be surprised to find that the traditional type of property policies you've purchased are not really there in cannabis. Yes, you can cover your property, but the terms might be a little bit narrower than you're used to. So look into it and don't just assume that the types of coverages you've had in a different industry apply to this one. Same thing with like employment practices liability, general liability and product liability. It seems like a straightforward coverage when you think about it. It's everybody, every business out there gets general liability insurance. There are downstream impacts to the decisions you make in the types of forms that these policies are issued on. From the beginning, the occurrence and claims made I put on here, I will put you to sleep if I dive into it, but it will have an impact on the decisions you make 3-4 years from now, depending on what type of form you have. So there's just a lot to consider. And as you can see, we're not going to cover it in 10 or 20 minutes, right? And if that's, if that's kind of the initial thought, you as a business or organization have from an insurance perspective, this isn't insurance that I recommend purchasing just online, right? Just doing a quick quote and taking what comes. This should be detailed conversations, and then flowing over, you should be building a risk management strategy out of it. And that's where I wanna flip to. So when you're overcoming challenges, there are really a couple of different ways to look at it. You can be that organization that decides you just want to insure as much as possible and transfer as much risk as you can via insurance, which is option one on the slide here. It's a little misleading. You're never going to be able to insure, whether it's cannabis or another industry, everything you have, right? So you're going to have to bring in risk management. Option two is a situation where you decide, you know what, we're going to insure a lot of our exposures in our organization, but there's going to be a couple that we decide to retain the risk on. We are going to retain the risk on indoor crop. We're going to self-insure. We're maybe going to self-insure our inventory. We feel confident in what we can do from a risk management perspective to mitigate and manage the risk. And we think we have the cash flow position to allow us to do that. Or you might have certain segments of your business, you just decide we're just going to self-insure it and implement a heavy standard of policies and procedures to reduce risk. We see that too. This is kind of getting closer and closer to what we call a captive insurance company, where you really are taking on the bulk of your exposure in hopes of long-term savings on your premium spend. That we could spend an hour or two on in it of itself, but it's the way that we see this industry trending just because of how high these insurance costs are growing. So I talked a lot about the word risk management. What are the strategies you can start to implement so that you can help alleviate maybe some of the insurance spend or bring down some of the insurance spend because you have proper risk management strategies in place? Safety is a key one. It sounds so simple. Many of you probably have to have some type of safety program and some of these other things built into your business plan to even get licensed. But putting it into a plan for licensing is much different than making sure that there's a consistent message to your employee base, especially as you grow. I mean, we see these MSOs and even single state operators with 6, 7 locations. It becomes decentralized very quickly. So how do you keep a centralized, let's say, safety program in place? You got to create a safety committee, have safety committee meetings, have best practices, policies and procedures that you're having the safety committee review and redistributing that back out to what probably becomes a relatively decentralized organization. There's this, piece of exposure management. So cannabis businesses are moving really fast, really hard. How do you make sure that each pivot that you make as a cannabis business is addressed, whether it's covered by insurance or whether you've implemented a risk management strategy to mitigate risk? It's really easy to overlook these things. Are you confident in the partners you've made in the cannabis space? So maybe you're just a retail center, nothing wrong with that, but you are getting a ton of product from processors and manufacturers. You're getting a ton of product from cultivators. Are they carrying a level of insurance that you'd expect them to? Or in the situation of a loss, is it all going to fall back on you as an organization? Employee management and wellness, this is a huge one in the cannabis space. I mean, we're looking at an opportunity to provide an entirely new array of jobs in each state where this becomes, medical and recreational. And you're starting to even see the pushback from the employee base, right? We see news of union formations or potential union formations in states like Illinois. It's happening all over. As a cannabis business, take care of your employees. It goes a long way to keeping them safe and keeping an overall healthy organization. Business continuity is another big piece in the cannabis space that I think is addressed on paper, but in actuality, in reality, isn't always transitioned over to a best practice. So in business continuity, we're talking about things like product recall programs. We had a pretty big recall here in Michigan. I foresee that in every state, you're going to have situations where recalls happen. I mean, we're talking about a product that people consume. It's no different than any type of food recall you see. We see them all the time, right? Stereo, whatever it might be, recalls happen. Well, if you have a product recall program, are you testing it at all? Are you having that conversation with key stakeholders in your organization that are going to implement it? When you have a loss, even if you have insurance, there's going to be indirect costs of that loss and that risk. There's going to be uninsured exposures. Your recall program needs to address those. Same with business continuity. One of the biggest challenges in the cannabis space is, if you have a fire loss at one of your facilities, maybe a partial fire loss, you can't really operate the way you were before. If we were not in the cannabis space, you just try to relocate to another area that's zoned industrial or at least zoned commercially, and you can get up and running temporarily. Insurance helps you cover some of that. In the cannabis space, sometimes it's too bad, right? You're in the only property left in maybe a green zone area in your municipality. You can't relocate. So you're down and out a little bit longer than normal. How is your business continuity policies and procedures and strategy addressing that? One other one I'll mention here, it's on the slide, cyber. So cyber liability. We see cyber criminal attacks on a federal and on a broader scale. They're happening all over the place. We see them happen in the cannabis industry. Think about your sophisticated facility that has all of its components connected via a network. Well, make sure there aren't any open-ended pieces to that network, because those get infiltrated. You're going to have a problem, and you should have a cyber incident response plan built out, no matter how good of an IT team you have internally or externally. This is something that's developing, and we're all kind of learning on. So keep up with that response plan. It's key to reducing your risk. So with that, I see that, I've been talking for about 20 minutes. I've got one more slide here, just kind of looking ahead. I think I'm going to pull back on that. I want to make sure, Tyler and the team, that we have time to answer questions. And, if anybody has additional questions on what's coming up next and what we should be aware of, I can address those too. But Tyler, I'll pitch it over to you and see if we want to answer a couple questions.
Yeah, thanks, Quintin. Great presentation. And one of the things that I just want to point out real quick, and then, please feel free to type any questions you have in the chat, and we'll get to answering those. Some of the things you were talking about in the key risk management strategies were safety programs, safety culture, standardization across different states and organizations. So if you're a big MSO, how do you, a lot of these MSOs are getting bigger through acquisition. So you have different programs. How do you standardize that? Things like recall programs, what you call business continuity. In CSQ, we call it crisis management, and then training for employees. These are all things that are requirements of the CSQ standard. So if I'm a company and I'm wanting to get certified to CSQ or another program, what does that mean for me with my insurance company? Is there any discounts? Do they look at me as having lower risk, anything like that?
I don't think we're quite to the point where you're going to see an immediate discount. We don't quite have maybe the level of sophistication of more developed insurance markets where you're going to see a direct discount because you have this designation. In some cases, you might see a lower rate, but I really wouldn't expect that. Here's what I would expect. I would expect you to have a better underwriting process and experience, because the minute an underwriter sees that you've done all of these pieces of due diligence, they're going to want to work with you, right? Insurance companies, at the end of the day, if you've ever been through the claim process, what they really want to do is they're not running business to pay out losses. They're there to help you if you need it, but they don't want to have losses on their business. So the more you do to mitigate that, the more they want to work with you. And that's going to matter, because the cannabis space right now is flooded with underwriting submissions. It can take 2-3 weeks to get a submission turned around. The better positioned your business is from a risk perspective, the quicker you're going to get that turnaround time, and you can evaluate options. That will save, and it's more indirect, but that will save your business money just as well.
And kind of on the same topic, so with the captive insurance, it's kind of the same concept too, right? You have all these different companies that are in this group together. So you want those other companies to be following the same procedures that you're following, right? If you're keeping your company at a higher standard.
Exactly. So it's funny, the slide I had on looking ahead that we kind of skipped over, it falls right in line with that. Is, if you want an opportunity to join a captive, you're going to need to have many of the things Tyler mentioned as part of CSQ. You've got to have those in place, because they're going to evaluate you and say, do we want them as part of our group, right? We're trying to all mitigate risk, because we get returns. In a captive, the benefit is you're getting return on that premium if there's a low loss history, almost like a dividend, if you've heard of that. And so before they let another member in the group, they want to make sure it's not going to impact their ability to collect a dividend, for sure. And then you mentioned M&A as well, a lot of merger and acquisition. It goes both ways. If you're looking to acquire, you're going to want to do due diligence and make sure that some of these organizations have the same level of certification that you have. On the flip side, if your strategy is exit, make your company more palatable, right? Have these designations in place. It's going to move you through a due diligence process during the M&A process that's going to probably pay dividends for your organization. There are so many acquisition targets out there. At some point, you're competing just to get bought, right?
And I'm glad you brought up mergers and acquisitions because we had a similar situation. There was a site who was already went through the CSQ process and was certified, and it did make the due diligence process a lot easier, because it was a lot larger organization, a big MSO that came and got them. And once again, it just made that due diligence process a lot easier because they had the QA team come down and, perform their own audit and realize they already had all these things in place.
Yeah, I think it's going to be kind of it's the next area of growth as markets saturate. I mean, we kind of have some saturation in Michigan, but you see it in more established markets as well. That's the strategy, right? A lot of people want to make an exit. It's time. They've built a successful business, but a lot of people are making that exit. And when saturation happens, what do we have? You might have, two businesses looking to make an exit with retail locations in the same municipalities. So at that point, it's going to come down to, how what do you look like from a safety perspective? How easy is this going to be?
Awesome. Well, I think that was a lot of my questions that I had. And is there any questions from the group? I don't see any in the chat here. Don't be shy. Okay, I'm not seeing any. Quintin, did you want to go ahead and just go through the last little bit of your presentation, or you good to go?
You know what? We just covered it. We covered
Okay,
it as
yeah,
we talked
perfect.
about. And actually, the looking ahead piece is this. There's going to be mergers and acquisitions, I think, in every state. I primarily I'm not sure what the base of attendee is here, but in Michigan we're seeing it pretty heavily. I'm not so sure in Missouri yet, Tyler. I mean, you're probably seeing it a little bit. But you just want to position yourself for that. And then the other piece of it is just insurance market availability and captive availability. As federally things change and as this becomes more and more accepted, you're going to see more insurance companies become available. As they do that, they're going to want to take on what I kind of call it like safe risk, right? They're going to want to take on organizations that have done some of this due diligence that Tyler mentioned from CSQ's perspective. And you're going to be the first in the door. That's when you really see this rate relief, I think. And then if you want to ever join a captive, yeah, absolutely. You're going to want some of these in place, or else it's going to be a very difficult road.
So we did have a question. Jamie asked if they could get a copy of the presentation. Just so everybody knows, this is being recorded, so you will get a copy of the recording. If you want the copy of the PowerPoint, just reach out to Quintin directly, and he can get that to you.
Absolutely, more than happy to. But yeah, that's it. That's it from my end. So.
All right. Well, it looks like we don't have any more questions. Thanks, guys. Like I said, you'll be getting the recording. And if you have any more questions for Quintin, you have his contact information. Please feel free to reach out to him directly. Thanks, guys.
Thanks, Tyler. Thanks, everyone.